Well, let's turn our attention back to the U.S. markets, and we're taking a look at tech stocks as the Nasdaq 100 index tests a long-term uptrend in place since 2008. Let's bring in Yahoo Finance's Jared Blickery, who's tracking that part of the action for us this morning. Jared.
That's right, Akiko. And let's begin by taking a multi-year view here. This is of the Nasdaq 100, as you were pointing out. Now, let me actually change this to a line chart so we can see this a little bit better. Clearly, we are hanging out in the bottom end of this range. So this goes all the way back to last year. Here is the top. Most of the markets, at least in the tech stocks, the tech arena, topped sometime last year, most of that occurring around November. And that's what we're seeing in the Nasdaq 100 overall. Now, you compare this to what's been happening with the Dow. You can see the Dow is way up here. So it's in the middle of its range. Quite a different story. And this has to do with what we were just talking about, tangentially at least, with respect to currency, the U.S. dollar, more people flooding into the dollar, the U.S. markets, because of the higher interest rates. Now, I just want to break down the tech sector a little bit more before I get into currencies and that effect. But here's what's happened over the last 7 days. Why 7 days? Because I want to go back to last Wednesday. Wednesday was the last Fed meeting, and that's when Chair Powell took the stage, and he was hawkish yet again. The worst performing sector since then is consumer discretionary. That's the worst performing sector of the year, followed by communication services, real estate, and tech. All of these down here are these mega cap sectors. So when we look at the Nasdaq 100, not surprisingly, we're seeing a lot of weakness. Now, one of the standouts here is Tesla. That's kind of its own idiosyncratic story. But when you delve down into various industries within tech, for instance, here are the semiconductors, you can see the semiconductors, which are very cyclical, very highly levered to the business cycle, very sensitive to what the Fed is doing. These were taking some of the biggest hits. And then you take a look at software, not the greatest story, but at least a mixed board here. So clearly the tech stocks that are most highly cyclical, most levered to the economy, those are the ones that are getting hit the most. A quick word on the yen. Money flowing back into the yen appreciating, that's not necessarily a bullish sign. That tends to happen, as a previous guest was saying, into recessions. That's when you see that money flooding back into the yen. The yen is playing, the Japanese government is playing catch up with the U.S., and eventually it's all going to be catch down. In the meantime, I think it's a warning shot that there's a lot more, or potentially a lot more, consternation in the markets to come. Akiko and Rochelle.